Hello, friends. Welcome to our channel Gateway to Rich. And today we have a very interesting topic investing mistakes for beginners. Please avoid all these mistakes, and it is guaranteed that you will never lose your money while you are investing in markets, stock markets, mutual funds, SIP, real estates, or anything else. Just keep in mind that you have to not make these mistakes. So we have five type of characters here. First is misconfused. Second, misclueless. Third, misdabunk. Fourth, misstupid. And fifth, misimpatient. If we avoid all these mistakes and all these characters to enter in our life, then we could be a misperfect investor. Now moving to our first mistake, misconfused. Misconfused is always confused whether to invest in stock markets, mutual funds, or just to keep money in bank account or maybe in real estate. What should I do? Is the market risky or safe? Or bank account is more safe? Whether should I invest in gold, bonds, funds, or property? She is nevertheless every time confused. And what will happen at last? She will never invest and just keep the money in bank account. But is that right? No, friends, that is not right because just keeping money in bank accounts, inflation rate will make your money halfer of that. आज the market is growing at its boom, अगर आप बैंक अकाउंट में पैसे रख रहे हैं तो वो बैंक अकाउंट में रखा हुआ पैसा आधा होता जाएगा डे बाय डे. Mistake 2, Miss Clueless. She is just clueless to keep the money as emergency funds also. Warren Buffett also says a very good quotation. Only buy something that you would be perfectly happy to hold if the market shut down for 10 years. So we should buy something which we can hold for a very long period. If that is not done, and if we are not keeping the portion of emergency funds, then what will happen? When any emergency comes, either we have to take loans from bank or we have to withdraw our investment with a very less profits or even in losses also, or we are into a very huge debts. So that is of no way. That is why always it is advised to invest the money which you don't have to touch for 10 years and just keep a small portion as your emergency funds which you can take use of it whenever required. Moving to third mistake, Miss Dabang. This is very interesting. She invests all the money at once. What will happen if I invest all the money at once? This is a Reliance stock share. Now we have bottom point and the high point. If I have 10 lakh rupees and I invest all that 10 lakh rupees at a higher point of 2000 or 2200 rupees and then the stock crashes, what will happen? I'll be very fearful that oh my god, I invested on high point and now the stock has come down. What will I say? I will just say market is a gamble. Market always gets into losses and I will never invest in it. But the right solution is to avoid investing all the money at once and do buy on dips. This pyramid also explains the same. When the stock is at higher point, buy small quantity. When it crashes to maybe 200 or 300 points, buy some more quantity. And when the stock is at the lower point, maybe crashes 500 to 600 points, buy more. Buy on dips and then you will have a great profits because आपका investment average हो जाएगा. Now coming to fourth mistake, Miss Stupid. Miss Stupid is sleeping and just listening to others. Lack of knowledge. Without any fundamental analysis, the share without knowledge is equal to tossing a ludo dicer. अगर buy आया तो definitely buy करना है. Without knowing what company does, what are the company's future plans, what company products and offers services, is the company in profit or is the company in loss? What balance sheet says? Is the company in loans and debts? Sector growing है भी या नहीं? Who are the company's shareholders? We'll not check all these. We don't have any information about all this. Q, we are Miss Stupids. And what we'll just check price of share. If the share is coming in 20 or maybe 50 rupees, then it is affordable and we'll buy it. Or if our friend says or others recommendations, oh, I have bought this share, you also buy this. And we'll definitely go into it without checking anything in the fundamentals of the company. Now, the best solution could be how to buy right share or right mutual fund. We'll take a very simple example of a daily routine. In morning, we wake up, we brush our teeth, we use Colgate. Colgate could be a very good example of a share. Then we go for bath, use soap, oil, shampoos, HUL, Hindustan Unilever Limited. This has many products to offer and one of the best company in these sectors. Now moving ahead to our routine, tea and biscuits could be our breakfast and tea time. Britannia biscuit offers a very good product and is a very good share in its growing sector. ब्रिटानिया के बिस्किट्स हम डेली खाते हैं and we know that they offer a very good variety. Then we go for office. We use a car, Tata Motors, or maybe Maruti Suzuki's, or maybe Bajaj Auto could be example of the auto's growing sector. Then next could be grocery shopping. We usually take something for a home, some stuff for cooking, and we go to DMart or maybe Reliance Retail. That could be a very good examples of shares in our daily routine. We use internet, mobile, browsing, Google. Everything we search is on Google. Netflix. Netflix could be an entertainment channel for us. Reliance Jio. Everybody has Reliance Jio SIM nowadays. All these are just growing day by day. And all these products we use in our daily lives. इसके अलावा if there are many shares around us, many products around us that we use in our daily lives. And we could just pick that products and we could check if we are satisfied with their products, if the company is good, and we can invest in these type of shares which can give us very good returns in later. Now moving to the fifth mistake, miss impatient. Now once we have invested in a good share, what's next? Lack of patience. We will see our portfolio, our investments every day. We are very fearful when the market goes down and we are very hurry up when the market goes up. जैसे ही market नीचे गिरेगा, we will be very fearful. Are we into losses? If the market will go up, we are in hurry. Oh, we are getting profit. Should we withdraw the investments? This is how it happens with impatient people. Now we'll just take again Reliance stock chart. From 2010 to 2016, there was no change. The stock was running on 450 to 500 rupees only. An impatient person could have just invested in 2010 and would have not waited till 2016. But what's after that? Once the impatient person has withdrawn her or his investments in 2017, it has increased so much with a bullish nature that it has gone up to 2200 rupees also, which could be more than 10 to 15% of CAGR returns, which is huge returns. That is why it is advised that we should be patient enough to keep our investment for longer period of time and should not worry even if the market goes down due to the external circumstances. The conclusion of this video was to make you learn finance with Funance. So please share, subscribe and like for more updates, and please share this video for all your friends so that they can also avoid all these mistakes and could be a perfect investor so that they can avoid the losses in life while they are investing in stock market. And for more, please wait on this channel. We'll soon come with a video more with finance. Till then, bye bye. Love you all. Take care.